We are at MIPIM 2025 and we are joined on the set of BiTV by Mr. Casper Hesp, who is CEO of Inrev. Casper, thank you for joining us on BiTV.
Thank you for inviting me.
Inrev, ANREV and PREA recently published, earlier this year actually, their 2025 Investment Intention Survey. Maybe to start, how do institutional investors currently view real estate in relation to other financial asset classes, and maybe also how has that sentiment evolved over the last few years?
Yeah, it's a good question. So first of all, if you look at, let's say, end of 2021 and beginning of 2022, when interest rates were going up, the liquid markets reacted quite quickly. So you saw stocks and bonds falling, but real estate was still in values quite steady at that time. So what happened is that a lot of institutional investors had over allocation to real estate. For 2 years long, and you see that in our study as well, they had an over allocation. But then in 2024 and 2023, actually real estate values were going down quite quickly as well. We have seen revaluations on average of around 20% in Europe, and that's why, and that's quite interesting, that you don't see an over allocation anymore within European investors in our survey. And then if you think about it, if you look at the reasons why they invest in real estate, so first of all, it's enhanced returns, diversification benefits, and thirdly, the very stable income stream that they have from their core investments. And then finally, I think an interesting one as well is that they can really make an impact on their ESG goals with their real estate portfolio, which makes it a very attractive asset class in comparison to the other assets.
Okay. Obviously, the market has been a little bit challenged over the last few years, and not all regions were affected in the same way. How does Europe compare to America, to APAC in terms of challenges? How have the market fared compared to their counterparts over the crisis of the last 2 years?
Yeah, so interestingly enough, if you look at we publish a global real estate fund index together with our partners in the US and in Asia. And if you look at the last quarter, so at the end of 2024, it was actually positive for all 3 regions. So that sentiment shows that the sentiment is a bit increasing. But if you look at the revaluations between the different regions, there's actually quite a difference, because on average there was a revaluation of minus 25% in the US, minus 21% in Europe, and only minus 15% in Asia. So it means that the Asian region is not that impacted if you compare it to the revaluations we have seen in Europe and in the US.
And obviously not all regions are the same, not all markets and not all sectors are the same. From a geographic but also a sectorial point of view, where do investors now maybe see opportunities coming? Where are they looking to deploy capital?
Yeah, so let's start with the sector, which I think is very interesting, because if you look at some of the trends that we've seen in the market, so urbanization, population growth, so that's a huge push for the residential sector, and that's what you also clearly see in our investment intention study. So the most preferred sector in 2025 is actually the residential sector, followed by the industrial sector, and followed by student housing. For the first time in our study, that student housing was actually in the first 3 options of investors, which is also, of course, part of the living sector. Now, there are also a bit of challenges, of course, and I think the office sector is the most obvious one. If you compare it, for example, with 10 years ago, the office sector was still the most preferred sector amongst investors, and now it's actually not in the top 3 anymore. It's actually falling quite behind, because, of course, the sector is a bit challenged, of course, with all the things we've seen with COVID and people working from home. So that's quite a challenge for the sector. Then from a country perspective, if you look at the top 3 preferred countries, that's the UK, that's Spain, and that's Germany, which is quite interesting enough, because France was always in the top 3 of investors, and now it's actually out for the first time, and Spain came in on 3rd place. But I think that has something to do a bit with the structure of the market in France as well, which is, of course, quite high proportion of office assets. If you compare that, for example, to the Dutch market, where the majority of the assets in the index are actually residential assets. And that's why the Dutch market is performing a bit better, and there's a lot of interest in it. But if you look at the combination, that's interesting as well. So, for example, Paris residential is still on top 3 of investors of preferred sector country combinations.
Okay.
So it's definitely a bit related to the sector, I think, the country interest in France.
Okay. And as we are entering a new real estate cycle, obviously strategies and risk profile maybe change a little bit for investors. What are the preferred point of entries to the market and the preferred strategies of investors at the moment?
Yeah, so in our investment attention study, you see that the most preferred sector at this moment is value added. So if you compare it like core, value added or opportunistic, around 62% is actually preferring these higher risk strategies, and 38% is preferring core investments. That's for all investors. So that means Asian, US investors and European investors. If you purely focus on the European investors, core is actually most preferred.
Okay.
But interestingly enough, so last year the value added and the opportunity space was there was much more interest in it even, and the core was only 20%. That's increased already to 40%, but that might indicate a bit of the uncertainties that we see in the market, of course, as well. Because then most of the times, if there are a lot of uncertainties, people fly to a bit find their way to core investments, I would say.
Okay. Going forward, as I said, we enter a new circle. What are maybe key trends that investors should keep an eye on or be aware of as they continue to deploy capital towards real estate?
Yeah, I think, and that's a very obvious one, I think, is the geopolitical uncertainty that we see in the current market. We've done this study in, say, October, November. And of course, the world changed quite a lot, I think, in those last couple of months. So geopolitical uncertainty was one of the 3 things that impacted their strategy the most. I think it's probably number 1 now, if you ask again. Other things that European investors are looking at are interest rate, which is, I think, very much related to the uncertainty in the market.
Yep.
And if there will be interest rate cuts, for example. And then thirdly is also climate risk. For especially European investors, that seems to be less of an issue for the US investors. But if you ask only the European investors, then climate risk is in their top 3 things that they have to consider or what they think about when investing into real estate.
Casper Hesp, thank you for joining us and thank you for this valuable insight. Thank you all also for being with us, and we'll see you soon on BiTV.